Hey everybody, it's Cam. Welcome back to the channel. In this video, we're going to talk about how to use Fibonacci extensions or retracements on Thinkorswim and how I use them on different time frames, from daily, weekly, monthly, long term, and on intraday moves. So we'll jump straight over to Thinkorswim. Here we'll look at Tesla. So this is Tesla's, chart on a quarterly basis. So each candlestick's a quarter. Obviously Tesla had the split here recently in July, but split adjusted high of 904. The webcam screen is covering the low here, but the low is $3 back in 2010. So on Thinkorswim, to draw a Fibonacci retracement, if you come down to the bottom, usually it'll just be this pointer arrow, right? So I click on screen, it's had the pointing arrow. But here brings up their drawing tools, and you got regression lines, price level targets. And down here you got, basically 8 different Fibonacci drawing tools. So there's Fibonacci retracement, Fibonacci extension, time series, time ratios, time extensions, arcs, fans, spiral. So really the only one that I use is the retracement button, which is this percent. The extension is basically the same thing, but if I do a retracement, it's only 2 clicks. If I do the extension, it's 3 clicks, so it just takes a little bit longer. So really, it's your preference on which you like to use, and then you can come into the properties here and add different levels that you want in. So this extension doesn't have the 127 that I have added on to the retracement side. So if I switch to retracement here, so come on. So now there's a 127 there, which is a level I like, so I've added that one in. But basically what you do is you take the high of a move to the low of the move. So typically for a stock that I watch a ton, so like Tesla here, I took all of them off. But so Tesla, I had one from the high 904.4 to 3. So we can get it exact. And usually long term I'll either keep these light blue or change it to white. Your color preference, you can use whatever system you like, just like my moving average lines here. Everybody's going to use different colors for those, but essentially, so long term, high to low, and then work down through the time frames. So here we can go to monthly, 10-year, not going to be much different, so we literally just lose the 3 down to 4.3. But that $1.3 difference in my eyes, you can't see it because of the screen again, but it's not going to make a massive difference here long term when the range is $897. So we go even tighter towards the weekly. So now we can do a 35.4 move. So usually I'll just leave the high to the low for long term, and then look at the tighter moves. So if I did each higher low to the high, eventually the chart gets pretty heavy with lines, and you don't really want to keep it like that, you just want the most relevant lines. So as this thing moves along, say time weighted as you're going along, so let's say basically from this April 2020 to now is gone, you would always just make the most recent move, So you got this high to this low. I draw my extension lines, just get an estimate close enough right now, and then you look at the future moves, So this eventually we zoom in here. If this is the screen you had right now, so let's say this is come on right there, like this was our current week. So say today was really February 2020, and this was the previous move. If this was tighter, we'll get this right on there. Oh man, come on. 193.8. So just edit that to make it look. So time weighted series, how you'd use these now is so I drew my fib from the high to the low, and then I'm looking for areas or indicators along these price levels. So first off, the Fibonacci tool is just showing you zones which could be possible areas of a reversal, So it is a indicator on its own right. Just because the price is at that level doesn't mean the price is going to reverse, and just because these lines give you an exact value doesn't mean it's going to reverse right at that price, right? So there's going to be a range, you're going to have wiggle room, spread, whatnot. There's always going to be a percent offset, but around these areas you're looking for a retracement, right? So the 61.8, the 50, the 38, those three in the middle are typically, especially Forex, but those three in the middle are like your strong reversal zones, the ones that you're looking at specifically. So here on the weekly chart, right, so you see we poke down here on this day, buyers come in, and it closes right at that 61.8 fib, right? So looks like that 61.8 fib level is going to hold, and then bam, the next week, what do you know, we go higher, right? Try to get back up to the 78.6, don't get it, sell off, we're still right in the middle, and then obviously we get this gap down over the week, right? Probably couldn't be forecast that, especially the gap through the middle. But you see again, the buyers push this thing back up to that 61.8 fib, but not enough buying pressure, so the resistance hold, and we sell off. Right, sell off through the 50, close below the 50 on the week, and then you see we gap down even more, gap below the 38.2. Right, so buyers came in, try to push above 38.2, overhead resistance puts us all the way back down to 23.6. Right, buyers come in, push this thing higher, and so you would like to see on here on the weekly, you go down to daily to see actually what happened. Right, so where is the buy signal down here by this 23.6? That pushed this thing back up, and as you can see, right, we basically stair stepper back up. Resistance here at 78, get to the 100, right, consolidate back at the 100. Breakout forms, push to the 127.2, gap up, get to the 161.8, right? So we break up above higher, but then we get consolidated around here, this 161.8. Then we get a lot of buyers come back in, push this thing up, moves us all the way up here now to this 261, which is also the 50 on the long term, right? Consolidated again at that area, we break above that level. Right, break the 68.1.8 from long term, push up higher to 78.6, which happens to be that 423. So these overlap quite a bit, as you'll see, right? And then above 423, I don't have them on there. But so once this one basically becomes invalidated, you can remove it and then move on to the next. So like here, the recent move on Tesla after the split, a good one would be this 904. The high down to this low right after the split, right? That's the lowest low after the move. So 329.88, right? And so this is really what the only two fib extensions retracements that I've had on Tesla was this most recent move here and in the long term. But one that you might consider now, because right, so this has been a downturn on Tesla the last couple weeks. So through basically January into March, you've had this big sell-off. So you could do it the other way, right? So I have been drawing it first by clicking the top, dragging it to the bottom, but it also works the other way. So right here, I can drag the bottom and go to the top to get the extension downward, right? So if I go top, click the high, and then go to the low, the extensions will go higher. If I go to the low to the high, the extensions will drop down. All right, so if we do that here, right, make sure this one, get this one close, 539.49. Change the color to red so I know it's a color that's going down. Right, we'll see we've made this move back into this 550 level where we also had two different other fibs, so that would be a higher indication that there could be a possible reversal sometime soon or inside this price range. It comes out here the last week, get a big green candle up. Looking back, hindsight, what does that move, right? The correction from interest rate, stimulus passing, yada yada yada. Not incredibly relevant, but also another indicator you can add on. And pushes us all the way up back to that 50% fib, right? Can't get above it. And then this week, try that 50% again, can't get above it, sell off below 61.8. So then, like I said, the fibs only are an indicator. So you could use other tools too. Like I like using the moving averages here. So so we were looking at the 9 moving average. We sold off back below the 61.8. Right, so I would say Tesla is more bearish right now until we can get back above this 9 EMA and also these tops here around the 50% fib. So that's just one way you could use these. So if we zoom in now onto the daily, right, you could look at you know, where's the possible entry, right? So you've drawn this downward fib extension here, right? So say you drew this exactly on the day, March 5th. March 8th comes, gapped over the weekend, right? So we still have an inside bar. So to me, this would be a setup play where, right, so you have a big candle, right? You have the inside bar on the candle, and the typical play that I like for inside bars, if it breaks the high or the low, that inside candle, you go that direction. So the high of this candle, 6020 or 620, excuse me, right about this 78.6 fib, right? So once price breaks that 620, I'd look for an entry to go long, right? So you have not only the candlestick play, but you also have the Fibonacci support here at 78.6 for an area of reversal. So that would be an extended play, and so I would enter this trade here, 78.6, looking for a target to go hit the 61.8. You know, just happen to do that in a single day. So I'd look to take my profit there around that 61.8 fib, depending on, you know, lower time frame chart. So you can also do these intraday, so you can go to 5-minute chart. So here we can use Tesla just from Friday, right? So you get this opening drop off the open about 7 o'clock, right? So as soon as it puts in that new low, you can draw it, right? So actually here, so you get this move on the open, you could draw one there, right? As time goes on, you could probably draw that one, right? And then just get rid of the previous, and then you'll eventually have the low of the day to that high of the day pre-market, right? And now you're just looking for the retracements back. So it's kind of a comprehensive video of how I use fibs. I don't use them alone. I use them in conjecture with other indicators, you know, price action, candlesticks. But they are something I look at for reversal zones, especially long term, and intraday for, you know, stocks that are dropping and stocks that are rising, right? So if they're going against the trend, eventually the trend's going to have to pull back, and that could be looking for an area to re-enter the trade, either long or short, based on what you are looking for. So hope you found that useful. I know a lot of people draw fibs different ways. You know, how I'm going to do it's going to be different than somebody else. That's totally cool, right? It's not an exact science, it's an art. So if you use fibs in a different way, let me know how you use them in the comments, and let's start a conversation on it. As always, because if I can do it a better way, somebody can teach me how to do it a better way, I'd be all ears to that. So hope you guys got something out of this. Hope you have a great weekend, and we'll see you in the next one.